Hello. Welcome to another episode of South Alley Investment Analysis Series. This is your analyst S. Today in this episode, we're going to talk about a company that provides online social media management tools for businesses. The name of the company is Sprout Social. The company is listed on Nasdaq under the ticker symbol SPT. It is currently traded at around $50. My recommendation is not buy, not sell, and not hold. I'm being creative here. It is CO, which is short for cautiously optimistic. Meaning, I am very bullish on the company in the longer run, but I would proceed cautiously in the shorter term as companies trade at peak valuation in the market. I might initiate a small position and wait for a pullback if it comes to buy more stocks. Please note, this content is intended for information sharing purposes only. Do your own research before making investment decisions. Sprout Social is the leading social media management platform that provides engagement, publishing, analytics, and collaboration tools for teams of all sizes. Its platform offers users the ability to integrate with Twitter, Facebook, LinkedIn, Instagram, Google+, among others. It is a pretty powerful tool. Sprout uses a single platform and code base to serve all segments and use cases. To better understand where and how Sprout adds value to companies, let's take a look at a use case in the education sector. According to the director of social media at Marquette University, the college has around 70 accounts on Sprout, including athletics, different colleges, and etc. Sprout let the director see at a glance what is going on with their partners and each departments. They also use the collaboration feature to send tasks to each other. The listening tool helps them determine what is trending and what is important. The analytics tool produces various meaningful KPIs and helps them making decisions. Now that we have a better understanding of the company's platform, let's now turn our attention to the company's history. Sprout is a Chicago company that was founded in year 2010. In 2011, it launched the Sprout platform. It made its first business acquisition in year 2017. And it eventually went public in December 2019. The IPO was priced at $17 per share, which gave the company a valuation of $870 million. In the COVID crash, the stock price dropped as much as 50% to a low of $10.50 in March. It subsequently recovered and made new highs in May. As of today, the stock had gained more than 390% from the March low, and it returned 210% year to date. The company's management team is led by Justin Howard and Aaron Rankin. Justin has a background in sales, and Aaron has a background in information systems management and software engineering. Sprout Social adopted a dual-class share structure. There are currently 52.9 million basic shares outstanding. 43.4 million shares are Class A common shares and 9.5 million are Class B common shares. Class B shares has 10 times the voting power that Class A shares do. Co-founders Justin Howard and Aaron Rankin own 37% and 41% Class B shares respectively. Therefore, the majority of voting power are concentrated in their hands. So, why do I recommend buying this stock? The first reason is, I think the adoption of social media engagement management tool is still in its early phase. In other words, the total addressable market opportunity is constantly expanding as company realizes how important social media is to their business and how these social media management tools can add value to their businesses. Now, before asking the questions, Why companies would spend on social media management tools? Let's take a step back and try to understand why companies need social media in the first place. Reason number one, their customers are active on social media. In 2020, nearly 60% of the world's population are already online. And the latest trends suggest that more than half of the world's total population use social media. And on average, the world's internet users spend 2 hours and 24 minutes using social media across all devices each day, accounting for more than 1/3 of their total internet hours. Reason number two, purchasing decisions are influenced by social media. The term social influencers has been coined to represent individuals who have a significant following on social media. With a large audience seeing these influencers' posts each day, they're often targeted by businesses to promote products. Reason number three, reputations are often at stake on social network. Here, I've included a link for the 19 massive corporate social media horror stories down below. Take a look. Each of them has caused a PR nightmare for the company. Last but not least, social media is also an expensive way of marketing. Compared to traditional marketing tools, it only costs social networking $75 to reach 2,000 audiences, which is 50% lower than broadcasting, or more than 90% lower than direct mail. Now here comes the exciting part. At present, per Sprout estimate, the market penetration rate is only 3 to 5%. Note that it's Sprout and its competitors combined. To look things from a different angle, Sprout reported 25,556 paying customers for the most recent quarter, and there are tens of millions of more companies that could potentially use Sprout solution in the future. Therefore, I'm very confident the adoption is still in its very early phase. But there are lots of companies in the market providing similar services. So why buy Sprout? Now here's the second reason. Sprout has an industry-leading platform. Look, the management team has not been shy in addressing its competition. This is from Q3 2020. They onboarded several Fortune 500 brands, including multiple wins from highly competitive RFPs, and delivered 42% growth in greater than 10,000 annual recurring revenue customers. While the win rates are at historic high levels, Ryan, the Vice President of Global Sales, answers the question. In the past quarter, they delivered 28 new features, and they allowed free trials for the customers to see and feel the product. He feels the two things combined make Sprout a differentiated product from its competitors. From Q1 2020, management says their competitive advantages have become increasingly compelling as customers grow averse to long sales cycles, expensive and lengthy implementations, and service-heavy platforms. Sprout Social is ranked as one of the best social media management tools on TechRadar. Its advantages include its ability to connect with a wide range of social media accounts, the powerful data analytics capabilities, and its dedication to customer support. Reason number three for owning the stock is that the management team has consistently delivered good results and executed on their end. In the past 3.5 years, the management team has achieved a 43% compounded annual growth rate in total annual recurring revenue and a 12% compounded annual growth rate in total customers. Management estimates 2020 sales is going to be between $131.4 and $131.5 million, which is roughly 28% higher than the year before. From 2017 to 2020, although the revenue growth rate kept slowing down, the operating margin and free cash flow margin has been improving consistently. In the long term, the management is forecasting durable growth and gross margin to increase to between 78% to 81%, and operating margin and FCF margin to be both above 20%. Per the analyst estimates, Sprout Social is expected to grow at 27% in year 2021, making it one of the fastest growing companies in the comps group. However, it is currently trading at 14 times 2021 revenue, which is below the comp average. As for the valuation, since the future cash flows are sort of hard to project at this moment, I'm using the public comps method to value the company. My target multiple is at 18.5 times price to 2021 revenue, and the implied share price is at $58.56 per share, which represents a 22% upside from the current share price. And here, from the football field graph, you can see that the EV to year 1 revenue and price to year 2 sales sort of gave a very similar range, with a low of around $35 and a high around $90, and our target price sits right in the middle. In terms of the downside risks, these three are top on my list. First, sector rotation or market meltdown. Keep in mind, this is a stock that has seen astonishing multiple expansion during year 2020. Although we're bullish on the stock for the longer term, in the shorter term, it is fully possible that the market reassesses the COVID winners in 2020. Second, economic downturn or slower than expected adoption. Third, growing competition. To sum things up, I think Sprout Social is going to be a beneficiary of increased social media usages in businesses and amongst ordinary people. It is a young company that should be able to sustain a growth rate north of 25% in the foreseeable future. Therefore, I recommend buying the stock and give a target price of $57. Thanks for watching. South Valley Investment is a YouTube channel that focuses on growth investing and fundamental analysis. If you like this video, please hit the like button. Please subscribe for more investment analysis videos. I'll see you next time. Bye bye.